And hello, South Florida. Welcome to another daily edition of the Real Estate Show, South Florida's number one program about real estate, America's longest running daily radio show, all about the topic of real estate. My name is Eric Willner, and I am your host, and we are here live Monday through Friday. Today being the midweek report, we got a great show for you today. A lot of headlines, and you're going to see by the diversity of just the headlines that are going on in the marketplace right now, you'll see why it is and can be a very confusing time for folks just getting into real estate. But let me tell you, for the veterans in real estate that understand what's going on and what's important in the marketplace, this is a very exciting time. And I've got some great news for everybody to share with you in tonight's show. So, buckle up your seatbelts, get out your notepads and pen and paper, because we've got a lot of great information to share with you. But before I get started, number one, I want to remind our listeners, our number one mission here, the mission of the Real Estate Show, is to educate and empower our listeners to understand and own more real estate. That's the name of the game here. And progress is not possible without change. And we're going through a whole bunch of change, which means that we could spell some very interesting progress for the real estate market. Now, remember, you can hear our show in a number of different places. Right here, where you're listening to us, you're listening to us either on our AM 1470 station. Perhaps you're listening to us on the FM dial at 96.9 and 95.3. Those are three stations, part of the Money Talk Radio. If you want to listen to us on the go on your smart device, all you have to do is search for us on one of the free apps that you can download, namely the iHeartRadio app, the TuneIn app, the Spreaker app, and those are just to name a few. Then search for 1470 AM WWNN Money Talk Radio. So any of those combination of words, you'll get to us. You'll listen to us live at 5, and that's Eastern time, each weekday. Now, in addition to our daily shows, we have our Real Estate Show Marathon Sunday nights, which starts at 9 p.m. and we go 4 shows back to back. So if you want to catch up on any of the shows that you missed, if you just want to get a strong dose of real estate, then come to our Sunday night show. Now, like I said, we got a really interesting show today. And as you know, on Mondays, we set out the theme, and we've been talking a lot about the first-time home buyer market, a lot about the opportunities in real estate. And you're going to see it's about to get more interesting even than it was in 2020. Real estate has played a very interesting game with gravity. In spite of soaring unemployment when the pandemic first hit, and which continues to still be very high, in spite of the pandemic itself, in spite of a contraction in the overall economy, both the real estate market and the stock market, which are telling you that there's good things ahead. The stock market is a leading indicator. The real estate market is a current indicator that there is a lot of money on the sidelines. There's a very high and growing thirst for more real estate properties. And when you hear some of the statistics, you're going to get an idea about why, this is a great time to be getting involved in real estate. In fact, the more I look at things and the more involved that I get at the upper levels of the folks that I'm speaking with, I'm going to tell you that from right here where I sit in this chair here in Boca Raton to all the way up to the brand new Treasury Secretary, Pamela Yellen, we are all in line to make real estate a lot better in 2021. So anyway, in addition to the radio show, I just wanted to also make everyone aware, and this is where you want to take a couple of notes. I'm going to give out a smart number, a telephone number that you can send your text to if you're looking for information, some of our reports, or to attend one of our workshops. Yes, in addition to 5 shows a week, we also have a number of workshops, starting out with our Monday, our automatic landlord debt solution. This is a very interesting workshop, and we alternate. One week we focus on debt reduction. The other week we focus on equity buildup. And it is a very interesting workshop. If you're interested in that, text the word equity to 561-861-2366. That's 561 area code 861-2366. The word there for the Monday night workshop, and we're going to be doing the debt version on this coming Monday. Now remember, this is space available. It is online, but these are what I would like to call cozy Zoom meetings that allow us to interact and talk a little bit more about the subject, which is actually a pretty interesting, very complex topic, simplified for our listeners to understand and take action so that you can build equity faster, reduce your debt faster, and basically turn that debt into wealth. Just imagine if that were possible. Well, it is. That's our Monday night. Tuesday night is our credit accelerator workshop. Now, this has been very popular. So much so is that we have now instituted 2 credit accelerator workshops, one on Tuesday, one on Wednesday, and that is at 8 p.m. If you want to attend, if you want the link, the invitation, it is by invitation exclusively. It is free. It is valuable, but you got to text the word credit to 561-861-2366. That's our smart number, 561-861-2366. The word is credit for Tuesday and for Wednesday. Thursday is one of my favorite days of the week. That's when we do our big round table. Now, this is an entrepreneur. We call it the big for business and investor group that we have, the big table. And we talk about real estate. We talk about entrepreneurialism. We talk about the business of running a business in real estate. And so if you'd like to attend, again, it's a forum. It's in a mastermind format. We got a very interesting, we always feature a guest speaker at that mastermind, and then we debate some of the business. We talk about different aspects, and there's a whole bunch of different perspectives that get brought in, and that's why that mastermind is so interesting. Again, big table to the smart number. That's big table to 561-861-2366. And again, we're keeping these to be of a moderate size. So that group has been growing. And once it reaches a certain spot, then it will be limited to those folks that are in that group. So don't hesitate. Don't miss out on a very valuable, very insightful meeting, 561-861-2366. And so that's our week. As you can see, 4 different workshops, 5 different shows, plus our Sunday night real estate marathon. You get a healthy dose of real estate, keeping it right here. Anyway, I want to jump right into our headlines, and then I'm going to break some of these headlines down a little bit deeper. But these are the latest. These are hot right off the press. These are real estate related. And this is what you should know right now if you're in real estate, and everybody, one way or another, is in real estate, or whether you're on real estate, you're not an owner, you just live on real estate, paying rent. Now, paying rent is financing somebody else's dream. And that's why we've been talking so much about first-time home buyers and helping more of our listeners, more Americans, to experience, benefit from the tax advantages, the possible income advantages, the psychological and developmental advantages that has been, that it has been medically proven that owning is healthier than renting, which is pretty neat when you think about it. Anyway, we've been watching stocks fluctuate a bit. Obviously, there's a lot of transition going on. And as I told you, the stock market doesn't love uncertainty. But as the new cabinet solidifies, we're going to talk about that today, as the direction of this presidency becomes clear, that all takes the uncertainty out. And don't forget, right now, we're actually in earnings season. So a lot of that is causing some fluctuations in the earnings reports and so forth. So that's on the stock market side. Now, on the real estate side, November home prices rose 9.5%, one of the biggest gains on record. Okay, we're talking about, they're comparing it to 2005, and as if you recall, if you're good, if you have good memory in history, 2005 and 2006 were the peak years where we had 2004, 5, and 6. We had double digit, and I'm talking about double digit that doesn't start with a 1, but double digit that started with a 2. We had 25%, 28%. We had 30% increases in values in those days. And of course, you know what that precipitated. But it's very interesting to see, and I'm not predicting a bubble here right now. In fact, if you just want to go back on some of the recent radio shows that we have been talking, in fact, go back right before the election when there were all the doom and gloomers out there saying that there's going to be this market collapse, there's going to be a avalanche, a tsunami, whatever creative writing terms that the reporters wanted to throw in there about what was going to happen to the marketplace. And I said, not by my view, it's not going to be. Yes, there will be a spike in distressed properties because right now everybody is protected by these moratoriums, which got extended throughout the year all the way to the end of the year, December 31st. Then it was officially extended out to January 31st, coming up in less than a few days. And then it was extended by the government out to the end of February. And stay tuned for more updates. We're going to be talking about that as those new proposals, this big stimulus package. You're going to hear me talking about the stimulus package more in today's show. But just I want you to know that sales are hot in a market where they should be not. And yet, here we are. This is what we have, and we'll get into that. What's interesting, and I don't want to sound political at all, but the United States across the country, and particularly in the liberal state of California, are easing COVID restrictions just as the new variants are taking hold. And right when a lot of people, scientists, and those in the medical community are warning that the more contagious variants are beginning to take hold in the U.S., and in spite of the vaccine rollout struggles that are going on as well. So, but it was an interesting, and we made some comments about they did a comparison on Florida and on California, both very high populations. You know, California, the most populous state in the country, Florida, the number 3 most populated state in the country. Two very different approaches to the restrictions, and the results were opposite of what most people would have expected. Florida having lower incidences of COVID versus California, which had higher restrictions and higher incidence of the COVID virus. Anyway, we're going to go ahead and take a quick break, hear a few words from our sponsor. When we come back, I'm going to talk about a report that shows the biggest housing market gains in 15 years. And I'm going to tell you, one of the giant data collectors out there expects bigger growth in 2021 as sustained demand pushes home values higher and ever higher. And we're going to talk about the new secretary, the Treasury Secretary, and a whole bunch more. So don't touch that dial. You're listening to the Midweek Report here on The Real Estate Show. My name is Eric Willner. I am your host, and I'll be right back. So there we go. Off to an exciting start here for The Real Estate Show. We're on break there, so I just wanted to say hi to John Brown, the best handyman in town. Nice flyer you sent me today. Very, very nice. Very professional. And it's funny because you sent that while I was in a meeting today of some very interesting not only loan products, but I was learning how to change credit scores on credit reports in real time. And that's ahead of and in conjunction with what we're doing with Time to Fix My Credit. But I just figured out how in some cases, not in all cases, I can take a 6-month process and reduce it down to 3, 2, maybe 1 month to in real time alter and affect credit scores with some new software that we just acquired. And hi, Marianne. The answer is yes. We can chat a little bit later. I got your message. Just a crazy day, and I was in with a bunch of lending experts today. Hey, Simone. Nice to see you there, Simone from Boca Raton. And of course, the lovely and talented Miss Erica right over here. You wave as if they're going to see you. And so what else? The credit was a big deal today, and that was really, really exciting. And when you couple with some of the resources, we're coming back. And welcome back. For those of you just joining us, you are listening to The Real Estate Show, South Florida's #1 program about real estate, America's longest running daily radio show about real estate. And I want to remind our listeners that we're also broadcasting this show live on our Facebook page. So if you have a Facebook page, all you have to do is go into the search, look for The Real Estate Show. And if you see this video and our red, black, and white real estate radio logo with the big microphone, then you're in the right place, and you can click the follow, and then you'll be notified every time that we go live. Now, all of our shows are archived there, so it's another good place for you to go back and get inoculated, get vaccinated with a good dose of vitamin real estate here. And I'm going to tell you that you're going to want to get all the information that you can get about real estate, because all signs are pointing, and barring something that's not currently on the horizon, I think we're going to see bigger gains in real estate this coming year than the last year. And bad news is for those of you sitting on the sidelines waiting for the foreclosure tsunami to take hold. Well, I hope you have something else to do while you're waiting, because it may just be a while. So here's kind of a funny scenario. Think about this. A year ago, when COVID-19 was something happening somewhere else. Now, think about that. A year ago today, there was talk of this, crazy flu virus going on in China, right? Not here. There was no known cases yet here in the United States. At the same time, the millennial generation was aging into prime first-time home buying age. The mortgage rates were at record lows. The housing market was poised for a very robust 2021. When the pandemic hit and the Americans shifted from in-office work to remote work, the shift prompted many to reevaluate their housing. And there was that, temporary pause. And they were looking and reevaluating their housing options, and that supercharged the demand, according to researchers at Zillow, and outlined in their new 2020 housing report. Very interesting read here. And they say they expect bigger growth in 2021 as sustained demand pushes home values even higher. A few highlights of the report are these. Number one, the full U.S. housing stock. Now think about these numbers, because this is kind of interesting and interrelated. The full U.S. housing stock gained about $2.5 trillion in value last year. The government pumped in something like $8 trillion. Real estate contributed with another $2.5 trillion. And out of that, watch this makeup. The $2.2 trillion was appreciation of existing homes, and $274 billion, okay, only a quarter of a trillion, a little bit more than a quarter of a trillion, was new construction. I'm telling you, new construction hasn't even caught up to putting in the new demand that we have, which is going to mean higher home prices this year, higher competition for real estate this year as we come out of the pandemic, hopefully, fingers crossed, and at least into a more of a state of normalcy. That $2.5 trillion of gain in the real estate value overall is more than any year since 2005 in what was a remarkably strong year for housing, and 2021 is likely to be stronger. That's them saying this as well. More than a fifth of the total housing value in the United States and almost half of the 10 most valuable metros are in California. Homes in California are worth a cumulative $7.8 trillion. Just homes in California, one state, okay? The biggest state. More than the next 3 states, Texas, Florida, and New York combined. And the state, we're talking about California, 4 of the top 10 metro areas with the highest total housing value: Los Angeles, San Francisco, San Jose, and San Diego. So here's a quote out of the article. The 2020 was a record-breaking year for the housing market, with intense competition among buyers driving up home prices. And that's according to the Zillow economist, by the way. While many faced financial hardships because of the pandemic, others, fortunate enough to maintain stable income, took a step back to contemplate what they wanted their home to be and hopped on Zillow, a little self-promotion there, to help find a place that filled their wish list. Builder confidence, perhaps in reaction to the boosted demand, hit record highs. We talked about builder confidence many times over the last several weeks. And they built more homes as a result. Add that together and you see why the housing market gained more than in any year since the Great Recession, which of course was back in 2007 and 2008. Micro, locally, New York's metro area is 3.1 trillion, and Los Angeles 2.8 trillion, San Francisco 1.7 trillion, and 7 metros gained more value than New York in 2020. And I want to now switch really quickly to the housing industry reacts to Yellen's confirmation. This is very interesting and very important. Probably not a lot of folks are talking about this in this regard. They're talking about the first, woman to hold the position, but industry officials in real estate were very quick to signal their support for the historic U.S. Secretary confirmation, U.S. Treasury Secretary confirmation of Janet Yellen. Now, she's a familiar name in Washington, and she's been around. By the way, did you know that she's 74 years old? This lady is kicking butt and taking names. And she now holds the distinction of being the first female to hold the position of U.S. Treasury Secretary in America's 230-year history. So pat on the back for her. After a unanimous 26-0 vote to confirm her, the Senate Finance Committee, the U.S. Senate voted 84-15 on Monday to approve Yellen, who will immediately get to work pushing President Joe Biden's financial and economic agenda on Capitol Hill. She was also very vocal, by the way, saying that she supports the $1.9 trillion Rescue Act that's being proposed right now. And she has some arrows in her quiver, so a couple of tools that she can also use, and she's already said that she's going to do it. So you can bet that she's going to be a key proponent for that Rescue Act. A number of senators also congratulate her following confirmation, and they're looking forward. Even Mitch McConnell, right, the former head of the Senate, is also very happy to see her. So she's good news all the way around. That's really good news for the real estate market as well. And lastly, I won't be able to get into the article, but overall forbearance volume has slightly increased, but decreased tremendously. Guess where? California. California forbearance numbers went way down. Double digits went down, even though as we get lengthier into this pandemic and the unemployment that has persisted, we've seen some of the forbearance volume actually go up, but very small amount, very small. Statistically, it exists an increase, but when you look at the numbers, it's not that big. So everything I've said here has been very positive for real estate. I hope you take that with you. And if you want to learn more about what to do with all that positive information, type the word discovery to 561-861-2366. That's 561-866-2366. And we can talk about how you can participate in what's going to be a great ride for real estate in 2021. Anyway, that's it for me today. That's the end of our show. I'm going to have to wrap it up right here in our midweek report. Remember, we'll be back again, same place, same time tomorrow, talking about the ATM edition of the Real Estate Show, about the money. We got a lot more good updates for you there as well. So until tomorrow, drive safe, wash those hands, and make it a great real estate day. Bye-bye. Boom. All right, man. Thank you. Go ahead and wrap this, close this up. There you go. Radio studio off. I want to say good night to our YouTube stream. And that's our little bit. Hey, Brian, how are you? Been a bit. Missed you last night on the coaching call as well. So hope everything is well. But definitely like to catch up with you and see how your debt shredding is coming along. So anyway, have a good night, and I will talk to you all tomorrow.